In 1973, a single decision made thousands of miles away quietly changed the way the entire modern world behaved. It wasn't a war in the traditional sense. It wasn't a technological breakthrough. It was oil. And from that moment onward, almost every economy on the planet started moving to one invisible heartbeat: the price of a barrel of crude oil. Oil is not rare, not new, and not glamorous. It is just black liquid buried under rock. But it became the force that decides whether groceries get expensive, factories slow down, flights become unaffordable, and even governments feel strong or weak overnight. Most economies no longer fully control their destiny. They react to oil. To understand why, imagine the global economy as a massive machine, where every country is one part of it. Factories in China, technology in the US, agriculture in India, shipping across oceans. And oil is the fuel that keeps every single moving part alive.
When oil prices rise, the effect does not stay in one place. It spreads like ink in water. Transport costs rise, food becomes expensive, inflation increases, and economies slow down. But oil markets don't wait for shortages. They react to fear of shortages. A protest, a rumor, sanctions, or geopolitical tension can move billions of dollars in seconds. Traders are not just buying oil, they are buying expectations. Oil is priced in US dollars globally, which means currency strength alone can change its impact on the world economy. Oil exporters depend on high prices, while importers depend on low prices. This creates a silent global imbalance where no one is permanently stable. Oil is also deeply tied to debt. Many countries plan budgets based on expected oil revenues. When prices fall, financial systems break quietly, not suddenly but through mismatched expectations. A single liter of fuel carries global shipping, currency, politics, and speculation inside it. Even renewable energy depends on oil for construction, mining, and logistics, which means oil still influences the speed of its own replacement. Oil price shocks don't just affect energy companies, they reprice the entire stock market. Airlines, shipping, tech, and consumer markets all react instantly. But the most overlooked effect is psychological. When oil rises, people feel poorer. When it falls, they feel richer. This changes spending, hiring, investment, and even government decisions. So oil is not just a commodity, it is a global confidence system disguised as an energy market. And even after decades of innovation, the world still reacts to oil almost instinctively, as if it has learned a habit it cannot unlearn. So the real question is not why oil matters, but what happens when something finally replaces it.